5 CR in 10 years on a salary of 25,000. Let's find out how. Now, I'm going to give you 3 approaches. There's a conservative approach, a moderate approach, and an aggressive approach. Don't forget to wait for the bonus content right at the end. Now, we have also attached the link to the Excel sheet calculator in the description below, so you can do your own calculations after you watch this video. So, assuming that you are on a salary of 25,000 per month and you're willing to allocate 30% of your salary to a monthly investment, that would come out to about 7,500 per month. Now keep in mind that these calculations are all done assuming that you'll increase your investment amount by about 10% each year, and we're also accounting for about 5% inflation year on year. Now that we've gotten that out of the way, let's look at the conservative approach first. So we'll be playing it safe over here with an 80% allocation into your mutual fund SIP and a 20% into your crypto SIP. Now when we say crypto in this case, it's going to be just Bitcoin. Now why Bitcoin? So here we're just playing it safe because Bitcoin is the least volatile crypto asset with the highest amount of liquidity. Now on a monthly salary of 25,000 with a 30% monthly investment, which amounts to 7,500 per month. Now if you do an 80-20 split with 80% going into your mutual fund SIP and 20% going into your Bitcoin SIP, 80% would essentially account for 6,000 rupees per month and the 20% would account for 1,500 rupees per month. Now let's find out how this looks on the calculator. The amount we're putting in is going to be rupees 6,000, which is about 80% of our allocated capital. We're going to be doing this for 120 months, which is about 10 years, and we're assuming we get returns of about 12% at the end of this. So assuming all of this, at the end of 10 years, we'll be walking away with 14 lakhs. And for the other 20%, we're going to put it in Bitcoin, which is going to amount to about 1,500 rupees per month for 120 months. And we're going to assume returns of 35% over the entire duration of 10 years. But why 35%? So in the past 10 years, Bitcoin has given amazing returns of 170%. But those are for the people who came early. If you're just jumping in right now, you can't expect 170% at the end of it. But experts suggest that over the next 10 years, we can expect about 45% returns. But for the sake of this video, we're going to remain a little conservative and we're going to go with 35%. Now remember, Bitcoin is a limited asset. There's only a supply of 21 million Bitcoins. Now with time, the demand for Bitcoin is only going to go up, the supply is going to go down, and well, the price is just going to go way up. Now back to our calculations. So, assuming we get a return of about 35% in Bitcoin, we're going to walk away with about 16 lakhs at the end of 10 years. Now this at the end of 10 years sums up to about 30 lakhs overall. So after 20 years, just look at the power of compounding. Just sticking to our strategy, putting in the same amount of money month on month, we're going to walk away with 5.8 CR. But this is at the end of 20 years, and that's not the goal, is it? We're looking at 10 years. Now let's find out how we can do that. On to the next approach. Now we put the same amount, but with a little bit more risk. This is going to be a moderate approach where we put 50% into mutual funds SIP and 50% into crypto. So again, taking a 10-year overview with our moderate approach, we're looking at about 3,750 rupees per month for 120 months. Again, in mutual funds, we're expecting about 12% returns. And this amounts to about 8.7 lakhs at the end of 10 years. And we're looking at crypto now. Again, we're looking at Bitcoin only. We're looking at about 3,750 per month again for 120 months, and again about 35% returns. The amount now comes up to 40 lakhs. And overall, this adds up to roughly 49 lakhs at the end of 10 years. Now, with the power of compounding, at the end of 20 years, we're looking at about 13.5 crores. Can you even imagine that number? You just stick to a strategy and you're walking away with 13.5 crores. Now remember, this amount is after taxation, which is about 30% in crypto and 12.5 for your mutual funds. So this is money that you get to keep all to yourself. But again, this is in 20 years and that's not what we're here for. We're here for 5 CR in 10 years. And that's going to take the aggressive approach. This is where we do a 20-80 split. 20 into your mutual funds and 80% into a crypto basket, not just Bitcoin. This crypto basket is going to have Bitcoin, Ethereum and Solana. But a disclaimer over here. This is a highly risky allocation, but the rewards are sweet. So only invest what you're willing to lose. But to be honest, if you were to ask me, I'd suggest this approach because you're probably watching this video because you're in your early 20s and you earn about 25k per month, let's say. So you don't have a lot to lose and you're willing to take higher risks, and in the long-term period, the risk is going to even out and drop dramatically. Now let me explain the asset allocation over here. So starting off with our 20% in mutual funds, that's pretty simple. You're going to put about 1,500 per month into your mutual funds SIP. and about your crypto basket. Since you have Bitcoin, Ethereum and Solana over here, we're going to split it into 40% in Bitcoin, 30% in Ethereum and about 10% in Solana. Here, we're going to assume that we'll make returns of about 62%. Now, why 62%? So for Bitcoin, we took 35 because we've got historical data and we can project it from there, right? But for Ethereum and Solana, we've got no significant historical data. Now, based on market history, it's safe to assume that if Bitcoin goes up by like 2x, Ethereum is going to go up by like 3x and Solana probably 5x. So that is the basis for our 62% returns over here. So now that we've gotten that out of the way, back to our trusty calculator. So here, again with our 10-year forecast, with our 20-80 split, you're going to put about 1500 rupees per month into your mutual funds SIP for 120 months, and considering 12% returns over this period, you're going to walk away with about 3.4 lakh rupees. Now, onto our crypto basket. For a period of 10 years, if we put in rupees 6,000 into this crypto basket at the allocation that we discussed, we'll be walking away with about 5.1 CR. Putting that together, that's roughly 5.2 CR at the end of 10 years. And we're not even going to do the 20-year calculation over here because, as we see, we've already achieved our goal. So, the mission of our video has been accomplished. Now, as promised, onto our bonus content. So one of our community members reached out to us and asked us, what if I put in my entire investment amount into just a mutual fund SIP or just a crypto SIP for a full year? What will this look like? Starting off with mutual funds. Assuming we put in the entire investment amount, which is 7,500 rupees for a period of 12 months. And this initial capital, that's for you to fill. If you've got some investment already, you can put that amount right over here. And we can see that over here, considering returns of about 12%, we end up with 84,000 rupees post-taxes. Now let's do the same for our crypto basket. 7,500 rupees per month for a period of 12 months. And again, you can put in your initial capital. And you can see that here, even though our capital goes up to about 1.2 lakhs, post-taxes, it only comes out to about 88,000. Now, remember, it's not very realistic to expect 62% returns in just 1 year. Now, we're doing it for the sake of this video because we were thinking of the long-term approach, right? There, it's a lot more realistic. But in just 1 year, it's give or take, right? It's hit or miss. Again, in the long term, another factor that would come into play is the taxes. Now, with adoption increasing gradually over time, it's very likely that the taxation situation changes and it will not remain a flat tax of 30%. It's very likely that it comes down. So, like we keep saying, go for the long-term approach and believe in the power of compounding. And onto our second piece of bonus content. Another one of our community members had a very interesting question. They asked us if they should do a lump sum investment in crypto or an SIP. Now, an ideal approach to take here would be an SIP because a lump sum is just not very advisable. First, because it's just not easy to time the market at all, almost impossible. So it's a lot easier for you to average out your investments over time with an SIP. Now, if you'd like to understand this better, look up the term dollar cost averaging. This explains to you that over time, even if the prices are higher in 1 month and lower in another month, over time your investments average themselves out, ensuring that you have a good buying price. So you do not have to worry about timing the market at all. And with that, our video comes to an end. Happy investing and do your own research. I'll see you in the next one.